Well, thank you so much for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. It is here. It is upon us. It is the report day. Well, we're going to be talking about it all through the day here. And just to kick things off this morning, a little bit of a side note, we had some overnight export sales business to talk about before we even get underway. So this time we have two sales items to talk about. Overnight, we sold soybeans to China. China, yes, China. 132,000 tons to China. Now, there's a little bit of a footnote here because they don't want it right now. They want it a year from now. And on the corn, 100,000 tons to unknown destinations. Now there, it is for immediate delivery. So let's bring in Brian Hoops of Midwest Market Solutions. Well, what do you think about that? How will that affect the market today?
Hey, good morning, Marlon. We've got plenty of things to affect the market this morning. 11 o'clock Central Time, the big supply and demand report. There's like 7 different things the USDA will be updating, different reports actually that they'll be updating today at 11. So there's going to be a ton of news flowing at us. These export numbers, I think, it's helpful for corn. It's a sale upfront months. It's not so helpful for soybeans because it's for 22-23 marketing year. If it was upfront demand, that would be a little bit better sign. I think that China's interested in buying U.S. products instead of South American. But of course, we're watching weather as well in South America, and there's a big debate after a hot and dry week. If some of the models are calling for a return to hot and dry, some are calling for much more of a ridge pattern that would allow a trough to come in and a lot of rain along with it. So there's going to be, I think, a lot of excitement, but it may wait until about 11 o'clock when all these reports hit the news wires.
Well, if you had to pick a guess, which one has the most potential for a big surprise this time, do you know?
Well, yeah, there's going to be some surprises. I think the winter wheat seedings numbers could be a surprise. I don't know that the USDA will really throw a big surprise as far as corn and soybean yields or even ending stocks, but quarterly stocks certainly I think could be something that goes overlooked, but will be a long-term direction as far as demand goes for corn, soybeans, and wheat, and that's something that trade really should be paying attention to. The world production numbers are likely to come down, but probably just very minimal, and we'll see just very limited movement as far as USDA. They'll probably be very conservative in lowering South American corn and soybean yield potential.
Okay, so the reports that you were talking about that are going to be coming out at noon Eastern time today, 11 o'clock Central, will include the crop production numbers for corn and soybeans. It will include the winter wheat seedings estimate for this coming growing season. It will include the quarterly grain stocks numbers, and it'll have the supply and demand and the crop production numbers all in separate reports. Don't they also take a look at South American production, or is that not a key feature this month, but next month?
Yeah, it's something that they look at and they will update. That's why I think they'll update it, but it'll be very minimal changes. They'll be very conservative this month. More changes to come in February and March after we see more of January weather. But they will certainly update it. It would be a shock if they don't lower corn and soybean yields slightly, probably similar to what CONAB did earlier this week. And that could affect world ending stocks numbers as well. But the trade is already factored in, I think, a lot of a small cut. A large cut would be a surprise. No cut would be a surprise.
Okay. On the corn, penny and a quarter lower this morning at 5.99 3/4. So it actually finished up overnight, just one tick below $6 with our quotes here from bar chart. December down 1/4 cent. On the soybean trade, Janet mentioned earlier we had a little weakness there. March down 3.5 cents at $13.83 per bushel. In the wheat market in Chicago, you had March going down 4 3/4 at $7.65.5. And ahead of the report, you had the Kansas City March wheat 4 1/4 lower at $7.87.5. Minneapolis spring wheat, the March, excuse me, was 1/4 cent higher at $9.28.5. Well, we'll take a look at our livestock trade when we come back in just a moment. Let's go back to Brian Hoops. Brian, with all the turmoil that could happen in the grain trade today, the livestock could be kind of a spectator, but a little bit ago, we also got our consumer price index numbers. seems to indicate, what, 7% inflation for this year. What do you think that may do to the overall livestock complex and even the ag futures?
Yeah, that CPI number was the largest that we've had since 1982. So it tells us inflation is here and continues to grow and is running rampant. What that means, I think, longer term for livestock is somewhat negative. You have consumers spending more money on energy and food and every item that they use. The fear is that high retail beef cuts of meat at restaurant levels will take a downturn in this type of environment, and it could hurt demand overall for some of the beef and pork products. So we have to be cognizant of that. We're very concerned that we're going to see much tighter numbers, but a reduced demand in 2022 that could limit some of the upside of this cattle. But we saw yesterday the futures market react to cash bids only about $1 lower than what they were the prior week. And that was kind of a surprise to the trade that had already factored in a much bigger discount. So futures rallied to kind of pair themselves up with where the bids are coming in. The stock market today has rallied off of these CPI numbers because it was kind of we always talk about buy the rumor, sell the fact. It was actually sell the rumor and then buy the fact this morning. And so it's good news that the stock market's trying to recover just a little bit after some of this negative news that was reported this morning.
So currently the Dow is up 106 points on the March futures. Let's take a look at how we finished in livestock yesterday. We were higher, led by the nearbuys. February live cattle up $1.42 yesterday. We had April 62 higher at 141.20. Yesterday on the feeder cattle market, well, we finished up the session with the March contract an even dollar higher. We were at 166.35. The deferred's not as strong as that. And when you get to the lean hog trade, well, lean hogs, you had February 52 lower, closing at 77.85. The April contract 50 lower at 84.20. And Brian, I know you and I have been discussing the fact that, I've noticed over the last week or two, you see the lunch meat aisle in big retail centers about half empty these days. That's a little bit of a concern with the packer flow.
Yeah, it absolutely has to be. And the other thing we didn't talk about this morning was what happens if we do have more COVID cases, outbreaks at some of these slaughter facilities that would slow, production down even further. That would be another thing that would send prices even higher at the retail level.
Okay, Brian, thanks for the help this morning. Always good to visit with you. Brian Hoops of Midwest Market Solutions. Janet, this is going to be an adventure-packed day, so buckle up, and we're about ready to go.